वेरी गुड इवनिंग टू ऑल। दिस साइड रूबी आहूजा और हम लोग आज डिस्कस करने जा रहे हैं गोल्ड मार्केट के बारे में। डिस्कस करने से पहले एक बार जानना चाहेंगे आप लोग का आवाज क्लियर है, स्क्रीन प्रॉपर्ली विजिबल है? इफ यस, काइंडली प्रेस 1 so that we can start our session from here. Okay, so देख रहे हैं muddling through the range levels for XEU USD. Points to be discussed today: gold technical outlook, tough selling ahead, gold volatility and gold prices normalizing relationship. Gold price rate technical analysis. IG client sentiment index. Gold spot versus US dollar, XEU USD, न्यू गोल्ड प्रेडिक्शन. सो गोल्ड टेक्निकल आउटलुक की बात करते हैं. So a stronger US dollar and negative monthly seasonal tendencies leaves gold prices on unstable footing. Until gold prices move above 1810, there is little reason to think that the technical price picture is supportive. According to the IG client sentiment index, gold prices still have a bullish bias in the near term. Tough selling ahead, so gold prices have been trading sideways at the start of November. Facing difficult conditions as risk appetite remains firm, US equity markets have moved to fresh all-time highs, and the US dollar via the DXY index has been bolstered by higher US Treasury yields. While Wednesday's downturn was rebuffed by the tally of on Thursday, it remains the case that the next few weeks may prove difficult as November has been the worst month of the year for gold, pricing during the QE era? So negative sessional tendencies aside, the fundamental backdrop continues to erode as the Federal Reserve has officially begun to taper its asset purchases while new fiscal stimulus from Washington appears limited in scope. The technical picture, which looked promising just last week, needs to shift more considerably before traders have a reason to impress long gold positions. The technical picture, which looked promising just last week, needs to shift more considerably before traders have a reason to impress long good positions. Gold volatility and gold prices normalizing relationship. Historically, gold prices have a relationship with the volatility unlike other asset classes. While other asset classes like bonds and stocks don't like increased volatility, signaling greater uncertainty around cash flows, dividend, coupon payments, etc. Gold tend to benefit during the periods of high volatility. Recent signs of gold prices tracking volatility suggest the relationship in returning to more historical terms. Yeah. So while other classes like bonds, stocks don't like increased volatility, signaling greater uncertainty around cash flows, dividend, coupon payments, etc. Signaling greater uncertainty around cash flows, dividend, coupon payments, etc. Gold tend to benefit during periods of high volatility. Recent signs of gold prices tracking volatility suggest that the relationship is returning to more historical terms. GBIH Gold Volatility Technical Analysis Daily Price Chart November 2020 to November 2021. वी आर ऑब्जर्विंग कि नवंबर 2020 टू नवंबर 2021 के अगर हम लोग डेटास देखते हैं तो लगातार हम लोग को करेक्शन ही देखने को मिले गोल्ड के प्राइसेस में बिकॉज लास्ट ईयर अगर हम लोग बात करते हैं 2020 के डेटास की सो द प्राइस वर फ्लक्चुएटिंग एट अराउंड 1900 और 2000 अप्रॉक्स basically 1978 approx, yeah, and currently it is at 1815, so it is down from the last year's perspective. So gold price and gold volatility. Gold price as measured by the CBO's gold volatility ETF GVChat, which tracks the 1 month implied volatility of gold as derived from the GLD option chain. So 1 month implied volatility of a gold is derived from the GLD option chain was trading at 15.77 at the time this report was written. So the relationship between the gold prices and gold volatility continues to shift towards its historical tendency, with the 20 days correlation strengthening to its strongest point since early June. The 5-day correlation between GBZ and gold prices is minus 0.19, while the 20 days correlation is positive 0.45. 1 week ago on October 28th, the 5 days correlation was 0.62 and the 20 days correlation was minus 0.03. Till now, if everything is clear, kindly press 15 so that we can continue. Or else, if there is any query till now, you can just mention in the chat box. So gold price rate techनिकल एनालिसिस डेली चार्ट फ्रॉम मई 2020 टू नवंबर 2021 के डेटाज अगर हम लोग देखते हैं तो मई 2020 में हम लोग को डाउनवर्ड डेटा देखने को मिले थे, लेकिन उसके बाद एक अपसाइड फ्लक्चुएशन और अभी भी पूरी तरीके से अपसाइड मोमेंटम दिखाते हुए है। So gold prices are able to clear the hurdle. Last week it was noted that as trading is a function of both price and time, the ascending trend line from the May 2019, March 2020 and March 2020 now resides closer to 1810 as key resistance. In the event that gold price are able to clear this hurdle, it could be a quick trip upward to the swing highs established over the summer near 1835, which constitutes the neckline of an inverse head and shoulder pattern that's potentially been forming since June. So, in the event that gold prices are able to clear this hurdle, it could be a quick trip upward to the swing highs established over the summer near 1835, which constitute the neckline of an inverse head and shoulder pattern that's potentially been forming since June. Daily MACD is falling, so unfortunately, gold price have not been able to make significant technical progress. And the dreadful seasonal backdrop suggests that November may not be the month to clear the aforementioned technical hurdles. While gold price are so while gold prices are above daily 5, 8, 13, and 21 exponential moving average envelope, the moving averages are in neither bearish or bullish sequential order. Daily MACD is falling while above signal line Daily MACD is falling while above signal line and daily slow stochastic are hovering around their median line. Until 1835 is achieved, then there is no sound technical reason to believe that gold prices have bottomed. Gold price technical analysis chart October 2015. To November 2021. Gold prices technical structure. So gold prices technical structure on the weekly time frame still doesn't indicate a significant directional bias. The weekly The weekly 4, 13, and 26 EMA, that is exponential moving average envelopes slope remain flat, suggesting neither bearish or bullish momentum. Even as weekly slow stochastic trended above their median line, weekly MACD remains below its signal line. It remains the case that with the triangle continuing to take shape, starting in June 2020, it appears that the sideways shuffle in gold prices is set to continue for the foreseeable future unless the 1835 level is broken. IG client sentiment index gold price forecast देख सकते हैं prices. Retail trader data. So gold retail trader data shows so the number of traders net long is 13.81% lower than yesterday and 5.37% lower from last week. While the number of traders net short is 18.39% higher than yesterday and 20.82% higher from the last week. We typically take a constraint view to crowd sentiment and the fact traders are net long suggest gold prices may continue to fall. Yet traders are less net long than yesterday and compared with last week. Recent changes in sentiment warn that the current gold price trend may soon reverse higher despite the fact traders remain net long. We typically take a contrarian view to crowd sentiment and the fact traders are net long suggest gold price may continue to fall. Yet traders are less net long than yesterday and compared with this last week. Recent changes in sentiment warn that the current gold price trend may soon reverse higher despite the fact traders remain net long. So देख सकते हैं करंट क्लोजिंग जो देखने को मिली 1817.79 पे. गोल्ड प्रेडिक्शन जो हम लोग देख रहे हैं कि हो सकता है एक बार वापस से थोड़े से अपसाइड मूव देते हुए देखने को मिल सकता है. तो हम लोग आगे डिस्कस करते हैं फॉरेक्स फैक्ट्री कैलेंडर के बारे में, बट तब तक एक बार क्लियर कर दीजिए अगर आप लोग को सब कुछ क्लियर है. काइंडली प्रेस 30 so that we can continue our session. सो फॉरेक्स फैक्ट्री डेटा में हम लोग देख रहे हैं कि नवंबर ऑफ 8th मंडे मार्केट, और मंडे को हम लोग देख रहे हैं कि हमें जो डेटास देखने को मिलने वाले वो बेसिकली स्पीक से बहुत ज़्यादा. रात को 9 बजे फेड चेयर पवेल स्पीक, 9:30 बजे एफओएमसी मेंबर विलियम स्पीक. इसके साथ रात में हम लोग को एफओएमसी मेंबर बोमैन स्पीक भी देखने को मिलने वाली है. ट्यूसडे की बात करते हैं तो ट्यूसडे हमारे पास 7 बजे डेटा है यूएसटी का, पीपीआई मंथ टू मंथ, कोर पीपीआई मंथ टू मंथ. इसके साथ ही फेड चेयर पवेल स्पीक, यानी कि ये वीक हमारे लिए इंपॉर्टेंट रहने वाला है क्योंकि वेडनेसडे को भी हम लोग को सीपीआई मंथ टू मंथ देखने को मिलने वाला है. थर्सडे की बात करें तो थर्सडे हमारे पास कोई इंपॉर्टेंट डेटा नहीं है, और फ्राइडे को भी इंपॉर्टेंट डेटास नहीं है, जो कि हमारे पास यूजुअली थर्सडे फ्राइडे को होते हैं, इस बार नहीं है. आ जाते हैं goldnetanya.com की बात करने। तो goldnetanya.com गोल्ड के प्राइसेस 1815 के आसपास क्लोज होते हुए। तो गोल्ड अपनी ओपनिंग से 23.75 पॉइंट्स की तेजी के साथ क्लोज होते हुए 1.33% की तेजी दिखाते हुए मिला। रेंज जो देखने को मिली थी फ्राइडे की वो 1784.88 का लो बनाते हुए 1818.26 का हाई बनाते हुए देखने को मिला था। ओपनिंग 1791.40, प्रीवियस क्लोजिंग थी 1791.36। एयर वाइज चेंजेस की बात करें तो 79.65 पॉइंट्स की गिरावट के साथ, दैट इज 4.20% की गिरावट के साथ अभी चलते हुए 52 weeks high 1965.47, whereas 52 weeks low 1676.73। वॉल्यूम जो ट्रेड करते हुए दिख रहा है 52,57,008 सॉरी 5 crore 25 lakhs 78,677 के आसपास वॉल्यूम ट्रेड करते हुए दिख रहा था, जो कि लास्ट वीक बहुत ही हाई वॉल्यूम के साथ ट्रेडिंग। सो ग्लोबल डेटा का मूव देखते हैं तो US30 पॉजिटिव, बिटकॉइन हम लोग को पॉजिटिव ट्रेड करते हुए दिखा था, शांघाई ऐसे नेगेटिव, UK100 पॉजिटिव, टैक्स 30 पॉजिटिव, निकेटी 25 नेगेटिव, निफ्टी 50 पॉजिटिव, ASX 200 पॉजिटिव, FRE 40 पॉजिटिव। इसके साथ यूके ऑयल पॉजिटिव, WTI क्रूड पॉजिटिव, यूएस डॉलर इंडेक्स नेगेटिव होते हुए दिखा था, जिसकी वजह से गोल्ड एक बार अपसाइड मूव करते हुए। सिल्वर भी पॉजिटिव क्लोज होते हुए, प्लैटिनम पैलेडियम सारे के सारे पॉजिटिव होते हुए देखने को मिले। आ जाते एक बार गोल्ड न्यूज एफएक्स ट्रेड की ओर। सेक्सी यूएसडी जंप टू टेस्ट October highs around 1810. Metals are rising considerably, boosted by lower USD on Friday. A firm break higher could trigger more gains. Gold price is eyeing a sustained move above the 1800 mark to unleash the additional recovery rally towards the previous week's high of 1810. So the 14 days relative strength index is pointing north above 50 level, suggesting that the bulls will likely remain in control in the near term. So on the downside, immediate support is at 200 days daily moving average at 1791, below which a strong cushion appears around 1784. At that level, the 21-day and 100 days simple moving average hang closer. Further south, the horizontal 50 days moving average at 1779 could be challenged. All in all, the path of last resistance appears to the upside. Gold price closed Thursday above the critical 200 days moving average barrier. बात करते हैं फंडामेंटल ओवरव्यूज की सो गोल्ड प्राइस इज ट्रेडिंग क्लोज टू फ्रेश 5 days high of 1800 as a downbeat market mood boosts the underlying bullish momentum with the focus now shifting towards the much awaited US non-farm payrolls data. Resurfacing concerns over the indebted Chinese property sector combined with pre-NFP. Cautious trading has weighed down on the investor sentiment, underpinning the traditional safe haven gold. Meanwhile, a renewed downtick in the US Treasury yield across the curve amid risk aversion has also collaborated with the latest leg up in the gold price. Gold price looks to extend Thursday's upsurge well past the 1800 barrier held by the market's reassessment of global tightening expectations. Both the Federal Reserve and the Bank of England stood pat on interest rate at their respective November policy meeting, lifting the sentiment around the non-yielding variant gold. Sure. So the data released today reported that retail sales within the European Economic Area were down by 0.3% month-on-month in September. This comes after sales was expected to rise 0.3% within the same period. However, rose as a result of summer surge in COVID-19 cases around the continent. So this comes after sales were expected to rise by 0.3% within the same period, however, rose as a result of summer surge in COVID-19 cases around the continent. As a result of the report, Euro USD fell to an intraday low of 1.1513, its lowest level since August 7th last year. Germany's tax 30 closed 0.15% higher on the news. एक बार इस डेटा को देखेंगे.
Hello, everybody, and welcome to Traders Together, a daily market update for Friday, the 5th of November. I am your host, Eleman Damble, and thank you for taking the time to view the sessions here this afternoon. Ladies and gents, before, of course, we do go through the actual agenda, just please somewhat acknowledge the risk warning, and we will be able to take things from this. Just please acknowledge the risk warning, and we will be able to commence. And since we have somewhat acknowledged the risk warning, we can move into today's headlines. Of course, the key headline for today was non-farm payrolls, of course, in the US, coming in at 531,000 jobs. Of course, it was expected the payrolls would rise around 450k, but a better than expected rise. Essentially, somewhat validated the Fed's decision to begin tapering earlier on this week. And of course, we saw more moves coming in gold as a result of today's. And it's somewhat strange because typically when we do see a better than expected NFP figure, it would typically mean lower gold prices, but gold rallied again, climbing somewhat to its highest level in the last 2 months. And we will look at this in the platform very, very shortly. And Moving away from the US into the EU, retail sales did miss expectations, falling by 0.3% after it was expected that they would rise month to month by that 0.3% figure. And of course, we saw Euro USD fall to its lowest level pretty much in almost 15 months as a result. Again, one that we will look at on the actual platform in a second. Last but not least, oil prices rebounded on Friday after, of course, selling off yesterday after the OPEC Plus decision. Guys, moving on. And starting with oil prices in that rebound, you can see after yesterday's fall, markets were somewhat trading at 45 RSI level again, which we have seen previous bounces take place at before. So this clearly was the floor in that instance. And after 3 consecutive days of bears, the bulls did come out to play on Friday. Prices rising by as much as $2 in today's session. Again, a lot of historical bulls at that level as well. But the question is, will this long-term bearish momentum be finally broken? Could we see this heading back towards those 7-year highs above $86 per barrel next week? Or are we going to see this floor of 79 eventually broken, including this RSI 45 level, and we see prices rallying, let's say, to around $75 per barrel next week? So that's an interesting one to pay attention to. Next one up, of course, Euro USD. We are seeing a decline in Euro USD again. Today's move sending prices to their lowest levels again there since July, actually, since July of last year. And the question is, are we going to see more bearish momentum? It does look like, especially on a weekly, that we're relatively oversold. So could we be seeing a reversal? I think that's the question a lot of Euro USD bulls are asking. For me personally, I was expecting this to potentially head to 119 before the close of the year. So it would be interesting to see if this level does hold. Could those bulls which lived there back in the summer of last year potentially reappear in the fall of 2021, taking prices potentially back to those levels? So that's definitely another one to pay attention to over the next few weeks. And last but not least, before we end the session, we have to look at gold. Again, 2 huge bullish days for gold. Gold, of course, yesterday was trading at a low of around 17.68, and of course today it went to as high as 18.16. So huge rally. You're looking at around $40-50 move in the price of gold in the space of 2 sessions. So huge move. Absolute congrats to anyone who was involved. And guys, again, doing the analysis, you can see similar to oil, it was trading at around 46, which clearly was somewhat of a flaw. Looking at the price as well, clearly a flaw there. A lot of bulls had previously lived there, and there was an opportunity, like we said yesterday, for this rise. The question is it heading to 18.29? Could we see another $14 move taking us to that longer-term resistance, its highest level since August? So guys, that is the session for today. Do like, do share, do subscribe, and I will see you on Monday. Have a good weekend.
So आगे हम लोग डिस्कस करेंगे गोल्ड न्यूज फ्यूचर्स, बट उसके पहले एक बार जानना चाहेंगे आप लोग को सारी चीजें क्लियर है? फेस काइंडली प्रेस 90 so that we can continue. So precious gold hits near 2-month peak as central banks strike dovish tone. So gold highs back best week in more than 2 months. Palladium platinum on course for weekly upticks. Lower yields complementing gains analyst. Gold rose more than 1% on Friday to a near 2-month high as major central banks to wish tone or interest rate this week lifted the demand for safe haven metal. Spot gold was up 1.2% at 1813.36 per ounce by 1:45 p.m. ET, recovering from a 0.3% drop sparked by data showing US employment increased more than expected in October. US gold futures for December delivery settled up 1.3% to $1816.80 per ounce. The limited reaction to the data shows, despite this strong labor market report, it is not going to change that what Federal Reserve Chair Jerome Powell signaled for this week, said Edward Moya, senior market analyst at brokerage Onada. The Federal Reserve on Wednesday stuck to its view that inflation would prove transitory and would likely not require a fast rise in interest rates. Near zero interest rate to spur economic growth during the COVID-19 pandemic have propelled gold prices to new highs over the last 2 years as easy monetary policy cut the opportunity cost of holding non-yielding interest rates. This week, the central announcement helped gold reverse from early losses to be on course for this best weekly gain since late October of August of about 1.8%. Gold bulls seem to be drawing strength from the Fed's unhurried stance on raising interest rate. It's on the 10 US 10-year Treasury note slipped to its lowest level in about a month. Physical gold demand in India. The world's second largest consumer jumped this week as buyers took advantage of slight dip in prices and bought the precious metal during the festive season. The spot silver rose 1.2% to $94.05 per ounce. Platinum rose 0.7% to $1,032.71 per ounce, and palladium was up 1.3% to $2,025.32 per ounce, both on course for a weekly gain. Moving towards gold news, kitco.com, and here we are with goldkitco.com. तो हम लोग डिस्कस करेंगे एक छोटी सी क्लिप.
Job numbers came in stronger than expected today on Friday, as the non-farm payrolls grew at 531,000, which was more than the consensus estimate of 450,000. The unemployment rate subsequently went down to 4.6%, down from 4.8% in September. The consensus estimate for this month was 4.7%. We're here to discuss strengths in the labor market and what this could mean for the financial markets with Jim Awad, the Senior Managing Director of Clearstead Advisors. Jim, welcome to Kitco. It's a pleasure to have you today.
Thank you. My pleasure.
So as I've stated earlier, the employment outlook seems to be picking up, jobs numbers are picking up, and the unemployment rate is falling. Is this in line with your expectations, Jim?
Yes, it's a very strong number. The economy is reaccelerating in the fourth quarter. People there's tremendous demand for workers. There's tremendous demand in the economy. Workers are being hired, and there's still some longer-term issues about the participation rate, which has been sticky at a low number. But net, it was a strong number. Wages were up. Previous numbers were revised upward. It speaks to the strength in the economy, and the stock market is celebrating it as we speak.
Okay. The unemployment rate falling, how much of that is due to an actual reacceleration of the economy versus just some of the temporary workers coming back into the market? Because as you recall, Jim, third quarter GDP was rather weak compared to the previous quarter.
Yeah, well, the fourth quarter is reaccelerating. So I think what you'll see is anybody who came back temporary will be inclined to stay full-time, and you'll see the unemployment rate continue to decline and hourly wages continue to grow as we celebrate what should be a very strong fourth quarter. If you talk to all of the companies, Expedia, the hotel companies, they're saying signing properties. They're saying that people have a lot of money. They've been cooped up for a long period of time. They are anxious to get out and spend and do things. And of course, this morning we have the news on the Pfizer COVID pill, which is really a game changer in terms of the pandemic. And as that gets rolled out, you're going to reduce people's fears of going out and circulating, and the economy really should be able to operate at maximum capacity over the next several months.
This is an interesting report. I'm just going to read a few paragraphs from my colleague Anna Golubova over here at Kiko News. She said, more Americans are quitting their jobs as they cite financial freedom gained from their crypto investments, according to a recent survey. Civic Science poll showed that 4% of 6,471 respondents resigned from their jobs in the past 12 months, citing financial freedom due to their crypto investments. So as you know, of course, the quits rate has also been going up. Actually higher than ever. And so this is an interesting phenomenon. You got people returning to the workforce, but also people voluntarily leaving the workforce for a variety of reasons. One of the reasons I just stated, they're making a lot more money from crypto investments than their regular jobs. What do you make of that?
Well, I think this is what you should expect in an improving economy and in an era of rising financial assets. People have money. This will continue as long as the economy and the financial markets continue to cooperate. The way it will end, if you look at history, is at some point the inflation numbers will accelerate to a degree that the Fed will start to raise interest rates, and that will be a pressure on financial assets of all kinds, including stocks, bonds, and crypto, and that will be the test for the economy. But right now, all the engines are on ignition, and it does not surprise me that people are making money and don't want to get back to work. But as wages rise, that will draw more people back into the workforce.
One more question on the labor market, Jim, and we'll move on. Have you observed difficulties in hiring where you're living? So, as you know, in the summertime, there was a shortage of labor, and it was difficult to fill jobs. Is that still happening?
Yes, there are signs everywhere. We're hiring. There is a shortage of workers in every aspect of the economy, and the way that gets solved is through further growth, further wages to induce people to come back to work, and also receding fears of getting sick from COVID will induce people to come back to work.
All right, so let's talk about inflation. You brought that up. Key point here, rising wages is down the line. What is that going to do to the inflation rate?
Well, rising wages are an accelerant of inflation. And the fear here is that just look at the Deere strike. They were offered a very generous compensation package, and they said they want more. So if people, it sort of becomes a circle. If workers are feeling inflation and paying more, then the nominal wage gains might not be real wage gains, and they may demand even more rises in wages. So the risk is that the expectation for inflation becomes self-fulfilling, as it did in the 70s. At this point, it doesn't look like it's going to be that bad, but you are going to get higher wages, higher inflation, higher interest rates over the next 12 months.
Do you think we'll have stagflation? It's something I've heard from several economists I've spoken to.
No, I think the growth is real. The pent-up demand is real. It'll be higher growth with higher inflation and higher interest rates. And as Jamie Dimon and Brian Moynihan of J.P. Morgan and Bank of America both said, to an extent, the markets can handle that. Higher interest rates, higher inflation are manageable up to a level, but they get to a level where it forces the Fed's hands, and that is the threat to the financial markets over the long term. I don't think it's an issue for the next 6 months, but it might be an issue beyond that. Of course, there are some long-term disinflationary forces. The Cathie Wood argument about technology and the Amazons of the world putting long-term pressure on inflation, and also as the supply chain shortages get alleviated, that should weigh against inflation. So this is something we're going to have to watch over the next 12 months. For the moment, inflation and interest rates look like they're headed higher, not to a danger zone, but they must be watched because that is the Achilles heel of the good economy and the good financial markets that we're experiencing.
Yes, and there's a school of thought, Jim, that the Fed cannot raise the Fed funds rate because they'd be stuck they would be overburdening the Treasury with really extraordinary amounts of interest expenses. Think about $30 trillion of debt that we have.
Right.
At just 5%, that implies $1.5 trillion of interest expenses, which is, about half the nation's gross revenue from taxes. So what do you think?
That's the long-term risk to the economy, and it's been there for a while. And we've had a free pass here with low inflation and low interest rates, but the market will take rates higher and force the Fed's hand if we get to that point. And the Fed will have no choice but to catch up. And as a nation, we'll pay the price. And that's out there, but that is not a 12 or 24-month problem. But I'll tell you, if we get into that scenario, that will be the end of the bull market, and interest rates will it'll be the end of the economic expansion. So that's what we have to watch. But I don't think it's something over the next 12, 18 months that's going to be a threat. But we do have to watch it.
Investment implications then. So over the next, let's say, 12 to 18 months, let's narrow the time horizon down first. What do you think should be the ideal asset classes that investors should pay attention to?
Well, it's a risk-on environment. So you want to own equities first and foremost, and a wide variety of equities. You can own both growth stocks and opening up stocks because the whole economy will benefit. You do not want to own long-term bonds because as inflation and interest rates go up, they will go down in value. Real estate should do well in that environment. Anything that benefits from inflation, alternative investments should do very well. Private credit, alternative investments of every kind. And I won't comment on crypto because it's anybody's guess and the jury is still out. But for now, crypto has a tailwind. The test with crypto will be if you get into a risk-off environment with higher interest rates. That will be the test as to whether crypto is just a speculative fad or a hedge against inflation.
Any particular sectors in the stock markets that you favor right now, Jim?
Well, long term, I'm still a believer in the moderate growth technology stocks, the Apples and the Microsofts of the world. But you have to say that the reopening stocks are going to do well over the next several months. Also, the one thing I would say to people is this is a bull market, but it will end. And so don't downgrade in terms of quality. And I would tell people playing the meme stocks, be careful. Someday it's going to go against you.
Yeah. Well, some people have been burned by that already, Jim. It's not a matter of when; it's a matter of how. Now, Jim, what about valuation? Some investors argue, well, maybe I haven't gotten in before. Maybe it's too late to get in now, given how much the stock markets have already run up in the past year. Is it too late, Jim?
No, I think you have a 12-month window here where you can make good money, especially relative to cash and bonds, with profits growing and the economy growing and interest rates, while they'll be rising, they will not be at a danger level for the next 12 months. So I think we have a 12-month fairway here, but there are longer-term risks, but not for the next 12 months.
Let me just posit this crazy theory for you, Jim, and feel free to disagree with me. So there's this notion now that valuations don't really matter anymore, because if you look at what was driving the meme stocks, for example, it was just social media chatter. Bunch of people online came together and decided to herd into one specific market. They didn't care about valuations or fundamentals. Most of them didn't even know what the companies did. And so one would argue that today, in today's environment, all you have to do is follow the herd, go on social media, and follow the momentum. Would you agree or disagree with that sentiment? No,
I would caution you not to play that game. It's not sustainable in the long term. And what will change it is if you morph into a risk-off preservation of capital environment, that game will disappear very quickly. And I can understand that people are making money on it and it's fun, but whenever it gets that easy, it's a bad ending. With 52 years experience in the business, in the strongest way that I can, I would say don't play that game.
I understand. Finally, how do you feel about the risk-off assets, treasuries, municipals, gold, precious metals?
Well, treasuries and any sort of debt instrument over the next 12 months is not going to have a positive return. Gold sometimes has done well during periods of inflation, sometimes has not. And time will tell whether it's going to what it's going to do this time. But I would say for the next 12 months, your risk on is going to do better than your risk off. If you want to hedge a little bit with gold and crypto, that's okay. But I think the better hedge are alternative investments, private credit, equity funds are a good way to hedge against the long equity exposure.
Mm-hmm. Final point, and I'll let you go, Jim. Because the jobs numbers came in stronger than expected, would you not argue, or could one not argue, that it's possible now that the Federal Reserve could lift off before or sooner than expected, thus presenting a bearish case for stocks?
Well, the market can handle 3 or so interest rate increases before it gets necessary. The expectations in the market are that the Fed will start in June and they will raise 2 or 3 times by the end of next year. So I would say 2023 is when you can become concerned, but there's still runway for 2022.
Excellent. Jim, thank you so much for coming on the show today. It was a pleasure to meet you, and I hope to speak to you again soon. Thank you.
Thank you. My pleasure.
And thank you for watching Kitco News. I'm David Lynn.
So gold surged above 1800. Will it still the show in 2020?
It's been a very
So it's been a very busy data week for the markets. The Federal Reserve announced tapering for its asset purchases, and the US economy added more than 5 lakh jobs in October. Gold has finally started to react, surging $25 on Friday and rising well above the $1800 an ounce level. Markets now seem to be pricing in more than a patient Federal Reserve going forward. Here is a look at Kitco's top 3 stories on the week. सो हमारी साइड से आज के लिए इतना ही. हम लोग गोल्ड का एक बार मूव देखते हैं. तो वन डे कैंडल की अगर हम लोग बात करते हैं तो वन डे कैंडल अपना लो बनाती हुई दिखी थी 1785 के अप्रोक्स, और फेस्ट सीजन की वजह से इसने कहीं ना कहीं 1818 तक के हाईज को टच किया है. आगे हम लोग ये देखेंगे कि 1800 प्लस के लेवल्स रुकते हैं. सो हमारी साइड से इतना ही, आगे हम लोग कल डिस्कस करेंगे। अगर आप लोग के साइड से कोई भी क्वेरी हो, यू कैन जस्ट मेंशन इन द चैट बॉक्स। हम लोग आगे देखेंगे कि ये लेवल सस्टेन करते हैं या फिर मार्केट इसके बाद वापस एक बार क्रैश करती हुई दिखती है 1800 के बिलो। Okay, so I hope everything is clear from your side, and I'm going to end the session right here. We will meet in our session tomorrow, and we'll discuss the live session or live trades of the gold market, and we'll discuss the new news and analysis. So, tab tak ke liye thank you so much for joining and concentrating, and for your precious time. I'm ending this session right here, right now. Thanks a lot. I hope